equity markets have been very prosperous over the past few years. This is actually, in a couple of days, the eighth, I believe, anniversary of the bull market that began in 2009 or 2010 or thereabouts. But I wonder what you see right now as the biggest risk to the stock and bond markets.
Well, I think they're overpriced, and it's been a lot of years, matter into the decades, when we've had bonds being in a bull market, and when you have zero interest rates, there has to be distortion. That is so far removed from free markets that there has to be a lot of distortions. Even when it's less complex and the Fed is just rigging the interest rates, there's a lot of distortion. So the money doesn't go exactly where the planners want it, and that's been the frustration here since this last recession started. They had all the QE and they complain it's not doing what it's supposed to do, and on, because they can print money, they can distribute the money, but they can't control exactly where it goes. And that's what they're fussing over. Now it looks like some of this money is leaking out, and it certainly has boosted the stock market. I don't think you can justify those prices on the stocks just out of value. I think there's a lot of bubble there, a lot of speculation because of excessive credit, and that's the danger of the excessive credit and artificially low interest rates, is you get the distortions, and frequently they're called bubbles. And this last modest correction, a couple thousand points, I think this is an indication of the leakage of the bubble, and I think people should be more concerned about what's coming rather than going back into a super bull market again.
Then let's talk about that and tease that thought out a little bit. A 2,000-point correction in the past month or thereabouts. Are you worried that that 2,000-point correction could turn into a 5,000-point correction?
Yeah, but I wouldn't use the word worry, because inevitably some corrections have to be made. Corrections are supposed to be corrections and help things. But if you keep patching it together like we did with the QE, that just made the bubble bigger and bigger and bigger. Now it's starting to leak. And now what are they going to do? They're going to keep patching it up. They're not going to allow. That's why I don't think they're going to deliberately keep raising the interest rates. I think interest rates may go up, but maybe people will quit buying our debt, because I think it's our debt problem that is significant. And you just can't run the whole world on debt, and the whole world depends on the dollar. So eventually interest rates will go up, and if the Fed continues on the things that they are sort of planning on doing, it's going to be a calamity.
Well, let's talk about that.
So how does this relate to cryptocurrency? I am a big Ron Paul fan. I think he makes a lot of sense and brings up a good argument that, we could be in a bubble, and when the commodities, not commodities, but when the equities and the dollar starts to tank, because obviously we've had an 8-year, almost 10-year bull market. Whenever this quantitative easing, this funny money stops, and stocks prices start to take a dump, bonds start to take a dump, and the dollar becomes weaker, well, where is the money going to go to? And especially all these foreign investors that have been buying our debt, where has that been going? So sorry about that, guys. But anyway, so this is going to lead to major growth in the cryptocurrency market. So I think that Ron Paul is right. I don't know if it's going to be this year or next year, but we are going to have a major correction. And when everything starts to collapse, I see a major run up in cryptocurrencies. So obviously regulations are going to help, and institutional money coming into Wall Street is really going to help the cryptocurrency market. But at the same time, I think that if there is this economic collapse, in the past, commodities have done well, like gold and silver. But I also see where people, and especially the foreigners, will rush, instead of buying, U.S. debt, they'll rush to cryptocurrencies and start putting money into that market. But let me know what you guys think, and your comments are greatly appreciated. Please leave a comment, and if you haven't had a chance, please subscribe to the channel. I'll be obviously posting as much informative news, mostly on cryptocurrencies, but stuff like this too on the economy, which will obviously tie into cryptocurrencies. I'll also share information on that. So let me know what you guys think, and I will talk to you guys soon.